What's up? This is Market Making Monday, episode 22. Before anything, I need you guys to please like, share, comment, and subscribe to the channel. And make sure you guys are hitting the notification button so you get videos as soon as they drop, just like this. And in today's video, we're going to talk about New Zealand dollar in the trade setup I caught this week. So you already know how it goes. Run my intro. Hey friends and new traders, welcome back to the channel. If you're new here, my name is Matt and I teach day traders just like you how to become profitable by teaching different tips and strategies. With that being said, let's get into this week's video. Alright, so last week I stated that pretty much on the daily we seen that we had this big drop from the week before. And last week, I just waiting. It was in consolidation a bit, and I was pretty much just simply waiting for the pullback. We had this level right here, previous low on the 4-hour, so I marked that level off, and I simply just made an area of where I was expecting the pullback. I said in last week's video, I was expecting the market to pull back to the 38.2, seeing that we had such a big drop. And if it broke the 38.2, then we definitely would respect the 61.8 as a area of interest to catch the move. So breaking down the move from last week, very simple, very simple. You can see on the 4-hour, we had a lot of consolidation. Another thing about the 38.2, before it hits the 38.2, you're most likely going to see a lot of consolidation, which we saw, right? So, a lot of consolidation. And then on last week Thursday, we had news release. So, the news came in and it pulled back a bit. I actually got in a little bit early, but for me, I knew that, okay, there's a psychological level of 63750, which is also a quarter point. These are psychological levels where the bank loves to trade at or collect funds at. So I entered right here just before the news came out with this engulfing candle right here on the 15-minute, and then after the news came out, it went against me a bit, but I knew that price was most likely going to just come down, so I just placed my stop just above the area of interest where I marked off on the 4-hour. You can see it right here where these candles were stopping at, and we see the wicks going down. So from the candle to the wick low, I drew out this zone to know exactly like what level is going to be respected or where I could expect the market to pull back at. So now going back to the 15-minute where I entered my trade at, I entered it based off this engulfing candle. And then you can see another reason why I entered off the engulfing candle. It came pretty close to the that psychological level right here, and then it came back down. But after the news came out, we seen I was in a bit of a drawdown, about 23 pips. My stop was about 27. Let's see exactly how many pips that was. Yeah, so roughly about 23 pip drawdown. Close to getting stopped out, but I didn't because I placed my stop. I gave my trade enough room to breathe. That's one of the most important things with trading. Sometimes you enter a trade, but you put your stop really tight. So what will happen is you'll notice that you place the trade correctly, but your stop is so tight that you're gonna get stopped out, and then you might notice the trade just go right into profit right after you get stopped out, thinking the market has something personally against you, but it's most likely the zone where you need to stay out of, where market could just bounce anywhere within that zone. So the best thing to do is put your stop away from the zone and away from the psychological level, like I did right here, just to give you guys a bigger, clearer picture. This was the zone right here, and my stop was a few pips above the zone. And as well, the next thing I figured the market would do was fill this gap, which it did. And you can see, like, once it filled that gap right here, you take this off 1 second. Once it filled this gap right here, you can see, like, it's just one side of liquidity. The market didn't come back and pull up until this wick right here, then it closing on this wick until over here. So that is something that I talked about in my past videos, the forever paid gap. So it came in, filled the forever paid gap, and then it dropped lower. Yeah, in the 4 hour I also made this counter trend line as well, just to know, like, once this trend line breaks, we could possibly see further downside movement. So for this week, I'm just hoping that the market continues to push lower and respects this counter trend line as well. Yeah, we didn't even hit 100% yet, so, or 0 of the trade yet. So this is where I'll be looking to take off partials and then looking to close out the trade. Once we hit the negative 27 or the negative 61.8, depending on how much strength is behind the trade, how much power is behind the trade. If it's like moving really fast, then we know that we're in for a good long push to the downside. We also have this this zone also that needs to be broken, but as you can see right now, the market is sitting at roughly about 6.3. We just had a break of this counter trend line. So yeah, so next week I'm just expecting further movement to the downside. Say that we do break this zone right here, I will be looking for some type of pullback to enter possibly again if I do close out the trade. So something like this, when it breaks down, just look for the pullback and then enter again. Some areas that I'm looking for the market to push to, like I said last week, I'm expecting the market to push maybe into this zone right here, this forever pay gap. You can see on the weekly, market has not touched this area or pull back to this area, so we need to pull back in this area. We also have this daily low right now right here. So if we break this daily low, we broke the 4 hour low, and you can see right here, this is the 4 hour low, but we still have the daily low down here. So once we break this daily low, I'm expecting much more further movement to the downside. So next week I'm expecting the push to the daily low. If not, worst case scenario, we get the pullback back up to the 61.8. And if we don't respect the 61.8, then you could best believe that we're going to see further movement back to the upside. That is my trade setup and my predictions for the market for the upcoming week. Yeah, so I hope this video was insightful and valuable. Please share the video. Please comment down below. And make sure you guys hit the notification button. And yeah, I hope you guys enjoy the rest of y'all week, day, evening, or whenever you decide to watch this video. I am out. Peace.